Hey guys, my name's Tyler Beatty, and for my project, I chose to cover ethics in accounting. Ethics in accounting is crucial for the well-being and growth of a business. A violation in ethics can occur when a company overstates assets and profits, lies to potential investors, or destroys important financial information. These are examples of mistakes made in the past by companies that violated the ethics standards of accounting. The IMA was formed to help business practice ethical values in management, accounting, and finance. The IMA has broken the ethical guidelines into principles and standards. These principles consist of honesty, fairness, objectivity, and responsibility. The standards consist of competence, confidentiality, integrity, and credibility. The IMA has issued these for their members to follow as well as others. First standard I will be discussing is competence. Competence means the ability to do something successfully or efficiently. To have competence in the workplace, you are required to follow applicable laws, regulations, and standards. This helps accountants accept only assignments for which necessary qualifications are possessed, which will lead accountants to prepare complete and clear reports after appropriate analysis. The second standard is confidentiality. Basically, confidentiality for an accountant is not sharing private information with the public. Do not disclose confidential information unless you are legally allowed to. This also means not using confidential information for your own personal advantage. The next standard is integrity. Integrity is often the most violated standard, as many people get tempted with greed and bribes from outside sources. But for an accountant, it is important to avoid activities that could affect their ability to perform duties. Some of these activities could include gifts or favors that influence behavior. And by always communicating unfavorable as well as favorable information, you are maintaining a great integrity. The last standard is credibility. Credibility is communicating information fairly and objectively. It means disclosing all relevant information that could influence a user's understanding of reports and recommendations. Also, by disclosing delays or deficiencies in information timeliness, processing, or internal controls. In conclusion, I'd like to share a story about a company that ultimately failed to meet these standards. The company is MCI. MCI is a major telecommunications company. MCI made major accounting misstatements that hid the increasing dangerous financial condition of the company. According to ecommercetime.com, it was stated that more than $9 billion in false or unsupported accounting entries were made in MCI's financial statements in order to achieve desired financial results. The driving factor behind this fraud was the CEO of the company was too focused on achieving impressive growth through acquisitions, not only for the company's financial growth, but his own growth as well. Because of this, he had to show a continual growing net worth in order to avoid margin calls on his own stock of the company. This is an example of a violation of the IMA's standards.